Hello guys, good day and welcome to another daily tutorial and trade idea on cash cows. Today is 17th of November 2025 and we actually traded yesterday and we made profits. I think we made two profits yesterday. So this was the first profit we made, all right, in the morning, and then we made another profit in the evening when the market wants to retest on the 1 hour, which is over here. Okay, we made another profit, I think at around 5 to 6 p.m. Okay, so congratulations to those that participated in both trades. So back to what we are discussing. You want to see that on the daily time frame. Let me show you. So for now, I need you guys to ignore all those writings that you're seeing on the screen. They'll all make sense when we get to the 1 hour time frame. Just focus now, right? Focus on the candlestick. That's just what I want you to focus on. So this was yesterday's candle. Let me show you. This was yesterday's candlestick. This was day before yesterday's candlestick, which was an inverted hammer candlestick, and then we went down. At first we went up over here, and then we went down, and today's candlestick is printing a bullish candle. Okay, now considering the fact that it's a bullish candlestick, then that means it is doing something. What is it doing? What this candle is doing right now is that it is trying to consolidate. Let me draw this mark D so that you can see what is happening. This candle over here is trying to consolidate. It's trying to pull back. Sorry, it's trying to actually pull back, because on an overall trend direction on the 1 hour, on the 1 day, we are bearish. Can you say we are bearish? And then the candlestick, or the most recent candlestick, is trying to have a pullback. Okay, it wants to pull back to correct price before it continues its downward move. Now, why do I say it wants to pull back? Let's go to the 1 hour so that you can see what is happening over there. Now, before we go to the 1 hour, this candlestick over here is what made me know that the market wants to pull back already. Okay, it is an inverted hammer candlestick indicating a bullish reversal, and then we got this candlestick over here, which is a hammer candlestick. And so if you go to the 1 hour time frame, where I labeled all what was happening in the market, and I did that so that I can be able to explain to you guys properly, and so that you can be able to understand what is actually happening in the market. Remember, I told you that trading is like storytelling. You have to know what is happening in the market. The market is telling you something. You have to understand. You have to decode what the market is actually telling you. So as you can see, the market was on a downtrend. Can you see? It's on a downtrend, and then we got consolidations over here, right? So this over here is our recent lower high. Like I indicated it over here, this is our supply zone. Since we are on the downtrend, we are going to be looking for supplies, right? Because on the downtrend, sellers are more active in the market. So when they are supplying Solana to the market more and more, the price is going to be crashing, because there is availability of sellers, but there is scarcity of buyers. So since there's scarcity of buyers, sellers are going to be competing at a much affordable price so that buyers can buy. Do you understand? Now that competition is what is making the price of Solana to go down. For instance, I want to sell my Solana for $150 per Solana per position, and then I just saw you selling yours for 149. So in order for me to actually sell mine quickly, I'll just turn mine to 148.9. Do you understand? So we'll keep competing, and then the price is going to keep crashing until it reaches to an oversold level. When it gets to an oversold level, the buyers that bought that Solana will start placing a sell order, selling it for 160, 175. That's where you're going to see a demand zone appearing, or a pullback appearing. Do you understand? So that's just what the market is doing. Now, this is our lower high, right? This is our supply zone. This is our fair value gap. We all know what fair value gap is by now. Like, we've been talking about fair value gap since we started this daily tutorial and trade ideas, right? Let me show you the fair value gap. Fair value gap is the space that you find in between three candlesticks, starting from the top wick of this candle to the bottom wick of this candle over here, right? So the space in between this place is the imbalance, and market always reacts to imbalance. Whenever market makes an imbalance, price goes back to balance that imbalance sooner or later. All right, And the reason why this supply zone became valid is because of this break of structure over here. Okay, so a supply zone or a demand zone must have a break of structure. So this is our break of structure, and a supply zone or demand zone must lead to a fair value gap. All right, and this is our fair value gap. Do you see how legit or how strong our supply zone is? And then we say a supply zone must if a supply zone wants to actually go back to tap the if price wants to go back to tap the supply zone, it must go back organically, not with a large candle spike. And as you can see, the price is organically trying to go back into the fair value gap over here. But then we had a consolidation, like I marked like I marked over here. Consolidation. This is the arrow of the consolidation. This is the consolidational phase over here. Let me show you. This is the consolidation that we had. Price came over here, tapped the support zone, went back up, tapped the resistance, came back, tapped the support, went back up, tapped the resistance, came back, tapped the resistance again, came back, and this was where we made profit yesterday. All right, so it came back. When it came back over here, we saw a reversal candlestick pattern both on 4 hours and on 1 hour. We saw a hammer candlestick and a confirmation. That was when we actually made an entry on the 5 minutes when our EMA 9 went below the price. We made an entry and we profited from it, and it came back down, and I think at around 4 or 5 p.m. yesterday we saw this breakout. I shared it on the Signal group. I also shared it on various platforms where my students are. Okay, so it's made a breakout over here, and we were waiting for a retest. Like I told you guys yesterday, I said the markets will either retest or will go back inside. Okay, and just go directly inside and touch this fair value gap. So on a 4 hours, what we are going to see is a fake out, but on this lower time frames, we are going to see breakout and retest to the upside. So it might just go back in. Now, how can we tell if this retest over here is going to continue to go up, or if it's just going to retest like this and continue its downward move? Now, the only way we can tell this is by going to the 4-hour time frame to see what is actually happening on the 4-hour time frame. Okay, so I hope you understood what happened over here. I hope you understood the labeling perfectly. Okay, let me draw it. Let me put it out a bit so that you can see it properly. So the market has told us what it is doing, so we have to look for we have to use the information of what the market has revealed to know what we are going to do next. So let's go to the 4 hours and see what is happening over there. Now on the 4 hours, you are going to see that price went down. Okay, price went down like this, and it also had a fair value gap. This is the supply zone, just like the 1 hour, and then these are the series of consolidation we have. Okay, and then the price broke out of the consolidation, and it created a hammer candlestick, or a pin bar rather, over here. Okay, when it created this, I know that the market wants to go up, and then it created a hammer candlestick. Let me zoom it out a little bit more so that you can see. Let me remove this. Okay, so as you can see, price created a pin bar over here and another pin bar over here, indicating that price wants to go up, and then it created this very strong bullish candle confirming the upward move, and we went from a weak bullish to a now strong bullish move, meaning that the market is just, or the price is just beginning to actually go up. So even if the price was to go down later in the day, we know that the price will first of all go up to manipulate and fill orders and fill the imbalances in the market. Probably, yeah, probably, because I don't know how far this price is going to go as at the moment. All I'm going to do is I'm going to go to the 5 minutes time frame and make sure my EMA 9 is below price, and make sure the 5 minutes time frame is printing higher highs and higher lows. When it prints a higher high and it's about to go down to form a change of a break of structure, right? When it forms a break of structure, price is about to go down, I'm going to look for a point of entry. Point of entry is looking for a fair value gap. Okay, at the recent, don't worry, I'm going to show you that. So Right now, we know that we are bullish on the 4 hours and on the 1 hour, even though we are bearish on the our overall trend direction is bearish. That retest or that pullback that we saw on the daily time frame is what will actually give us a completely bullish move on the 1 hour and 4 hour. So the 4 hour is telling us that the price will continue to go up for now. And if we go back to the 1 hour, let's see if we can find a change of character on the 1 hour. So the character hasn't changed yet, and as you can see, this was our most recent lower low. This is our most recent lower low, and price just broke the most recent lower low over here. So now this is going to become our new lower low, and then this is going to become our new lower high. Let me draw it out. I'm going to come back in a bit. So we have marked out our new lower low over here, right, and our new lower high over here. Okay, so as long as price hasn't broke above this point, we are still on a downtrend on the 1 hour time frame. And if price goes back to break this, then we have a break of structure. So if price breaks above here like this, then this point has become our change of character. Okay, but if price breaks below, indicating a continuation, if price somehow comes back and makes a continuation, then this point over here becomes our break of structure. Okay, then we're just going to be looking for sales. Okay, when we see a candlestick, a bearish candlestick appearing over here, and the MACD is beginning to show weak bullish movement in the market, then we're just going to go to the 5 minutes and look for a change of character first over here on the 5 minutes. After looking for that change of character or a double top pattern, you're going to see the market giving us this kind of structure. Okay, and then it's going to retest, and then we're going to enter on the retest. So if we get that, we can enter a short position. If we have a change of character, meaning that we're having lower highs, lower lows, higher highs, higher lows, and then we just had a lower low like this, and this is the change of character and the lower high, then we can enter the market at this point so that it can go down with us. Okay, so that is it for that. But as for now, we are on a bullish move, and the MACD, let me show you. The MACD is giving strong bullish signal. As you can see, it's giving strong bullish signal, and the market is just beginning to actually go up. So sorry, you can go to the 5 minutes time frame now to actually scalp the market for a long position. Okay, we can scalp the market for a long position on the 5 minutes time frame, but we need to make sure that the 5 minutes time frame is printing an uptrend. Okay, it's printing an uptrend. So as you can see, we are on the 5 minutes time frame, and the price, the price is above EMA9. EMA9 is this black line that you're seeing. Okay, so price is above EMA9, indicating an uptrend. And if I zoom out a little bit, you're going to see the double bottom pattern. Okay, this is it. This is the double bottom pattern, indicating a shift in market structure. Okay, now until the price breaks this previous lower high, we are still on a downtrend in the 5 minutes time frame. Okay, oh, it has, I think, no, it hasn't broken, it hasn't broken the previous downtrend. So until price breaks below this, sorry, until price breaks above this, we are still on a downtrend. So I'm just going to wait for price to go above this, and if price goes above this, I can just zoom out price like this. When I zoom out price, I'm going to look for a fair value gap in the market. So my point of interest is going to be on this place. My point of interest is going to be on this place like this. So it's just going to be this point. So I'm going to be looking for a fair value gap, an FVG over here, and a an order block or a demand zone over here. As you can see, there's a demand zone right here. Let me show you. This red candle over here before the impulsive green candle is a demand zone, and this was the fair value gap it formed. Can you see it? This was the fair value gap it formed, and it led to a break of structure over here, as you can see. So it led to a break of structure, and when price came back, if you notice, when price came back and tapped the fair value gap, what happened? It formed a hammer candlestick. So price came back over here and entered the fair value gap, and this is the hammer candlestick. So when you have a point of entry or an area of interest, when price goes to that area of interest, just look for the next available candlestick that is indicating a bullish move on a demand zone. On the supply zone, you look for the candlestick that is indicating a bearish move. Okay, so we saw this hammer candlestick, we saw confirmations, we saw doji, and then the price went back up to create a new break of structure again. Can you see the new break of structure it formed? It formed a new break of structure and confirming an upward move, like a continuation. So we're just going to come back over here and look for a fair value gap again that this price over here wants to tap. So when the price taps in that fair value gap, okay, then we'll start looking for a signal, an entry signal, like a candlestick pattern that will allow us to enter. When we see that, we make sure that the MACD is printing weak bearish or strong bullish. Okay, as you can see, the MACD is currently printing a weak bullish move because the price is going down. Okay, so this is not an ideal time for us to enter. All we have to do is to mark out our demand zone and mark out a fair value gap. Now let's find the fair value gap on this price over here. So I think I have already found my fair value gap. Let me draw it out so you can see. So I'm just going to use the parallel channel to draw out my fair value gap. Now this is the first fair value gap I have seen. Okay, let me paint it blue so that it can be visible. Great, so this is my first fair value gap, and the second fair value gap can be found over here. This is the wick, and this is the last body, like this. Okay, so these are our fair value gap, and there's another fair value gap again. Let me show you, which has already been mitigated by price already. This wick, and this body, like this. So these are the three fair value gaps on this impulsive move. Okay, so these are the three fair value gaps on this impulsive move, and this is our supply zone. This is our supply zone right here, the last red candlestick before the impulsive move upward, which is otherwise called an order block. All right, so the price has tapped over here, tapped the first fair value gap. So and the EMA9 is below the price. Okay, so it means that it might be our legit or our most recent valid fair value gap, which the price or which the market wants to respect, or it might be this one. Price might come back to this place, or price might better still come back to this place before it continues its move upward. But now what is going to be our guide for now is going to be this MACD over here. The MACD is still printing weak bullish move in the market, which means that this candle might just be a green candle in the midst of red candles. We have to wait for another candle. Now when we see the continuation over here of a green candle again, and then the MACD starts printing strong bullish, we can make an entry over here and then target this small place like this to scalp the market. Okay, we're just going to be scalping a little bit before the market reverses. All right, that is just how we are going to make this entry and use this technique to actually scalp before we get to the main FVG of the price of the higher or larger or broader market direction on the 1 hour and 4 hours, which is over here, the main fair value gap, and then the supply zone. Because due to what I have seen on the 1 hour time frame, I believe and I'm anticipating that price might reach this this fair value gap area, or better still, price might reach the support zone, because the bullish candlestick is massive over here and the MACD is resuming its bullish move. So price might just go over here, but there's going to be a little bit of consolidation on this point because it's a key level. It's a place where price has visited over and over and over and over again, right? So there's going to be a little bit of waste of time over here. Now if the price happens to break above this, then it will visit this fair value gap, better still visit the supply zone. Then we're going to be looking for a sell signal over here. When we see a sell signal, then we're going to start selling on the lower time frame. I hope you're understanding the strategy that we are using to actually trade the market every day. Okay, and I hope it's making sense to you. Okay, we are using multiple strategies. On the 1 day time frame, we are using the combination of market structure and daily candle bias. On the 1 hour time frame, we are using purely market structure and price action. Then on the entry time frame, which is the 5 minutes time frame, we are using market structure, which is higher highs, higher lows, or lower highs, lower lows, determining them, and technical analysis indicators to execute entries and exits. Okay, so that is it for that. I hope this video helps, and we are going to see what happens next. So for those of us that normally ask me where they should place their entry and exit, I think I have made it clear for you to understand. If the market continues over here, you place an entry over here, then reduce your lot size, reduce your leverage so much, because price naturally has to go over here and over here. So you just reduce your lot size or reduce your leverage, and then place your exit or place your stop loss somewhere over here at the support at the previous supply zone. Okay, at the previous supply zone, then you place a stop loss over here, and then place a take profit above. Maybe just give it a 1-to-1 risk reward ratio. Okay, because if the price stops over here, then it is not an A plus setup. Where we want it to reach is at least, where we want price to reach is at least this point or this point, so that we can be able to have a broader up move, okay, than this point. So if peradventure price gets to this point, you can place your stop loss over here, and then place your take profit over here, like a 1-to-1 risk reward ratio. And if price goes to this level, good, that's what we want. So you can place your stop loss over here. All right, just place a stop loss over here, and then place your take profit at this level where liquidity is resting. So as you can see, this is going to be your SL, and then this is going to be your TP, and then this is going to be your entry. Okay, this is going to be your entry over here. All right, that's just how the market works, and that's how we are going to follow the market. If you want to be a little bit safer, you can just put the stop loss a little bit below this impulsive move over here, because when the market comes back to this level, the bulls that entered the market over here will put more money to protect their price, or to protect the asset they bought over here, and drive the market back up. Okay, so I hope this video helps.